Let's talk about alternative credit. Banks continue to pull back from traditional lending for a variety of reasons. Just where we're at right now, do we view that as a risk or an opportunity?
Well, it's a little bit of both. There were some aggressive trends and themes from an underwriting perspective in this market coming out of the COVID period. And that's true both the private real estate markets as well as the private corporate credit markets. So again, how many challenges there will be will depend on what the economy ultimately does. But there has been significant credit deterioration in segments of that market, which will create tremendous opportunity for new capital, but also lead to some disappointment across some of those legacy strategies. From a vintage perspective, given that banks have stepped back, given that there is this significant opportunity to provide new capital to more challenged capital structures within this market, we think this vintage, the vintages over the next couple of years are going to be very, very attractive from a return perspective across the full range of opportunities within the private markets. The one caveat is that you do have a lot of large players in this space appearing to battle over market share and scale. Anytime you have that dynamic in the market, you have to be cognizant of the fact that you could get into a situation where competition leads to less credit protection, more aggressive underwriting. You want to be selective. You want to be careful about capacity management. You want to be in the areas perhaps that are a bit more complex but less trafficked. And that's our mindset in trying to bring our clients value, a strong value proposition within these segments of the market. So some challenges across the legacy space, some still adjustment of pricing in that area. But in terms of new capital deployment over the course of the next 2 to 3 years, very attractive opportunities. Great news is that this is a sizable area of the market today, so investors can be patient. They don't have to think about deploying money over the course of the next few months or the next couple of quarters. We do think this is going to be a sustained multi-year opportunity.